this, and we're gonna, put it on a lot of platforms. But right now it's being live streamed on LinkedIn, on YouTube, and on Twitter. Well, I don't know if it's still on Twitter, but it's supposed to be live streamed on Twitter and on Facebook. So yeah. So for those who may be joining us on those platforms, HEJ.tax, we do those live streams every week where we talk all things tax. If you're seeing us for the first time, have a look at HEJ.tax/events to see what's coming up next. And every day we release what we hope to be helpful video content. So you can join us on your favorite platform there. So this, we actually publish on about 23, 24 platforms every day. SoundCloud, iTunes, Google Play, Amazon, wherever it is you get your favorite podcast, chances are we're there as well. So without further ado, I introduce you to Tom. Tom, can you please introduce yourself?
Sure. Thanks for having me. Pleasure to be here, and hello to everyone that may be tuning in today. My name's Tom Pewtress. I work for Skybound Wealth Management. We primarily focus on working with individuals who have moved abroad when it comes to financial planning. And we've got many offices around the world for all intents and purposes. The offices from the US all through the UK, Europe, right over to here. I'm in Dubai. I've been out in Dubai for 7 years now, I think. Yeah, just over 7 years, something like that. So enjoying my time here in the Middle East. And we're licensed all the way down to Australia as a firm. So yeah, that's me and who I work for. I guess from my point of view, I specialize in working with US connected expats. Like I said, based out of here in Dubai, but I'm able to cover Europe from here, Africa from here, the Middle East and Asia from here. So far enough away from the US, but still well placed from a geographical point of view. And we've got a good regulatory footprint across all those regions to make sure that we're best placed to help people when it comes to cross-border financial planning.
Thank you for that. And as you mentioned, regulatory. So my understanding is that you guys are SEC licensed. Is that correct?
Yeah. We are SEC licensed in the US.
Right, which is of course super important, because unfortunately there may be other players in this space who aren't properly licensed. So I think that's an important thing to put out there, that you guys are licensed and credentialed to do what you do. It's important right now, given other things happening in other spaces with other companies that may or may not have been licensed and registered. So that's super. That's great. So the second thing, you mentioned U.S. exposed persons. So I just wanted to kind of chip in and kind of define and refine what that means. So these are people that are U.S. exposed for tax purposes. So they would be U.S. citizens, regardless of where they may reside, U.S. green card holders or lawful permanent residents, again, regardless of where they may actually reside, and those who may be U.S. tax resident by virtue of substantial presence. So maybe they're on an H-1B1, or they're on an L-1 or whatever, and they're spending sufficient time so that they're trapped in the U.S. tax net. And you offer products and services and helpful advice for those types of people, correct?
Yeah, absolutely. And we kind of have two sides to our business. We have a number of offices over in the US itself. So we have an office on the East Coast, an office on the West Coast. Again, a large country trying to get across those time zones and the amount of people that are over there. And primitively, we're helping expats in the US as our main concept of business. We've always kind of been a cross-border financial planning firm, helping expats where they may be. And that's kind of where our business really started, and we went into a number of regions as a result of that. And again, going back to your substantial presence test, or those that are on a H1 visa and that kind of stuff, working over the US, that might be Europeans, Brits, South Africans, Australians over in the US. So we help those guys there, and my team on that side of the world are helping connect to people in the US. Me being here in Dubai is really helping those expats, those US expats that have some sort of tie, whether it be through passport, green cards. We meet a lot of people who have been to the US in the past and have picked up a green card for being there for a certain period of time. And they may be European passport holders, British passport holders, GCC passport holders, but have picked up that tie. And that's where we work with Udon and other kind of third parties to really hone in on what it means to have that green card, because I think a lot of people come away from the US not with a clue, sadly,
Yeah.
and don't really understand that bit of it. So we just try and, you know, work with people based on those ties and get them to understand what those, not necessarily their liabilities, you know, that's not for us as financial planners, but to bring it to their attention that it is an area that needs to be addressed. And if it is something that they want to continue to hold in terms of having that tie, whether that be a passport, you know, a green card, or even those that are married to US connected people, again, they can kind of fall under that net of US connected to some degree. So we just then start to look at what their options are when it comes to financial planning, and how and why it's important to take note of that connection, because there is ultimately a tax obligation that comes from it.
Absolutely. And that's an important point you raise, and thanks for that people get US connected and they don't even realize it. So last Friday night, I attended a gala hosted by the American Chamber in Dubai, as well as the US Embassy, Abu Dhabi. So, you know, all these people, they were celebrating the anniversary of the historical relationship between the United States and the United Arab Emirates. And, you know, yeah, so many people who may be Emirati, they go to university. It is, of course, a popular destination in terms of education, or they may work with a multinational and they spend considerable time in the US. And whenever they return to the Emirates, they come back with passports, green cards, spouses, kids, whatever the case may be. That means suddenly somehow their family is US connected. So you're right, it is more common than people realize.
I think it's a big one as well for those that, you know, go over to the States and get educated there, and then they stay on for maybe a couple of years to enroll in work, etc. You know, I speak to a lot of people from the Far East and across the GCC that picked up that green card and didn't know what the implication of it was, and, you know, came back at home and stuffed it in a drawer. And it's like, you know, when those conversations on financial planning, and one of the conversations that virtually any bank will have with you today, if you're trying to open up a bank account, right, is, are you US connected, a US passport holder, green card holder? They tick yes, and then all this other paperwork comes out, and it's okay, that's your FATCA declaration, but no one understands what that is and what it's there for, right? So yeah, it's kind of our job to just highlight that to people and the importance of it, and hopefully and encourage them to engage with, again, the right third parties to go through that planning process.
Okay, great. So can you tell me, so like if someone is US exposed through family members or themselves personally or whatever, what would you say are the top 3 things they need to look for in considering who's the right financial advisor for them?
Yeah, good question. I think the list could be a lot more than 3, you know, but I think one thing that we touched on earlier, and you kind of highlighted as I introduced myself there, and is just making sure that your advisor is regulated. I can't stress the importance of that. You know, I look around the world and there's varying degrees of regulation, and in the US we have the SEC, which overlooks the majority of financial services, and I think if anyone's watched the film, you know, the SEC are the big bad wolf kind of scenario, but you know, they're a regulator there to protect the consumer, and that's important. And I think when you are looking for advice, you have to make sure that the person you're engaging with has that level of protection for the consumer. I think specifically for US connected people, kind of the second point is then, does that advisor, in whatever capacity he is regulated, does he have a US specific proposition? So, you know, your advisor may be regulated, for example, here in the UAE by, you know, the DIFC or the Securities and Commodities Authority. But does that regulated advisor have a proposition that is tailored towards somebody who is of US connection? And that's important, and I'll come on to that probably later, because there is things that, again, because of your US connection, because of that tax reporting requirement and that liability in the future, you need to make sure that the solutions that you're taking on board are specific to you. And I think the third thing as well, and this is probably one that goes missed quite a lot, but is important to me, is what capacity is that person providing advice to you in? So I meet a lot of people where they've engaged with a financial advisor, and all they've done is given their money to an investment bank who have just risk profiled somebody, for example, and sold them a load of financial instruments. And whilst that's great because your money potentially is working for you, has it been done in the right way, or are you just, are you just investing at that point? And I think there's varying degrees of how somebody can sit in your life from a financial point of view. And it's just understanding what that role is, because I think there's so many roles out there to engage in advice on. There's robo, for example, robo advisory. That's just very simple. It's plug and play. There's having someone like me who, we would class ourselves as financial planners, and we're here to kind of map the journey. Investment management is something that we do, but it's almost a secondary item on the list. So we engage with people about, okay, where are you today? What do you want to achieve in the future? We do a lot of goal-based planning, and that's kind of the big part of our proposition, and making sure that we're along the journey with you. We're not here just to make a transactional sale, and some people want that, some people need that, but it's just understanding what capacity you're employing that person when it comes to looking for financial advice.
Okay, that's great. And to pick up on the second point that you raised, there's a lot of investment products or financial instruments available. I mean, the list is probably endless. Yeah. How does someone decide what's the best fit for them? What's that process look like?
Yeah. Again, it goes back to making sure that it is that US specific proposition for me, because sadly, where people or US people have engaged and tried to get advice internationally, if we look back over the last 12 years now, since kind of that implementation of FATCA in 2010, and people starting to take notice of it up until kind of 2012, where foreign institutions really cottoned on to what was going on. But you had, before 2010, you had the entire world to talk to as a US person. You had all the financial institutions globally. If you're an expat working in the Middle East, anybody would talk to, anybody would provide you advice, and anybody would take you on as a client. Post that 2010 FATCA initiative, then that world shrank, because those offshore institutions didn't necessarily want to deal with you as a person, because you had that US connection. And much of that planning then went back to the US. But then since 2015, I'd say probably HSBC be one of the first, kind of then the pressure from the SEC and the increased KYC and AML requirements for banking and investment advice in the US, that started to get harder. So the world has started to shrink. So whilst the universe is huge, it's become quite constricted. And I think it's probably one of the biggest reasons why, certainly from our point of view, the US expat market is vastly underserved today. But those that have had financial advice, or those that are seeking financial advice, one of the one things to be aware of is that it has to be that US specific proposition, because taking advice from an individual who doesn't, or a firm that doesn't have access to the right solutions, if you end up with a non-domiciled US solution, so let's take mutual funds for a second. If you're not familiar with what a mutual fund is, it's a collective investment vehicle based on maybe an industry or a sector or a geography. Let's take North America, for example. You could have money invested in a North American mutual fund, and it would be virtually invested in kind of the S&P and the wider market. But if that fund house hadn't based its fund out of America, and it had based itself out of, let's say, Luxembourg or Ireland, for example, two very popular jurisdictions for non-US mutual funds, those are what we would call passive foreign investment companies, or PFICs, right? And as an American, you don't want to end up with one of those. You'll be probably able to tell people more why you don't want to end up with one of those, but ultimately they're just taxed punitively. So really, it's the number one thing from my point of view as an expat. It's probably the easiest thing to end up with, the worst thing as a result, because it's just not good from a tax planning point of view and a financial planning point of view. So that's really something to stay away from. I think when trying to understand what you need to have in your life, it's again sitting down and understanding what part to play that investment vehicle has. So again, I've seen people try and seek advice a financial planner or financial advisor or an investment banking, private bank, whatever it may be, whatever kind of scope we're engaging that person on, try and do the right thing. So, you know, maybe invest money through US wrappers, for example, pension wrappers, for example, that have been quite popular over the last decade or so. And that allows a US person not necessarily to end up with US domiciled assets, but they can end up with foreign or PFIX, but in a wrap scenario, which doesn't cause that tax problem. But what it does is it puts that money in an environment that potentially there's limitations on access and consequences on drawdown. So again, just to kind of simplify that, it's, you know, if you've met somebody or you're talking to somebody who's encouraging you to invest in a wrapper or a structure that allows you to invest in this big, huge universe of investments that are available to so many, just understand what that wrapper is and what the consequences are of doing it. You know, so kind of the second point, well, the first point is, you know, make sure it's US domicile. That's the first point. We need to make sure that we've got the right thing in place. Make sure that the structure of what you're investing in is suitable for you. So if it is an offshore wrapper, for example, does it meet your criteria for the future? It might be a US domicile structure. So, you know, for example, we have various different types of accounts in the US. We have just a general investment account or a brokerage account, right? That's just, you have the ability to put money in and take money out as and when you need to. But then you have Roth IRAs, traditional IRAs, 401ks, 529s, all these other structures. I think it's important just to understand the structure that you're investing through and make sure that you know the limitations of that and what it can and can't do for you. And then kind of thirdly, and the last one is, and this applies to all those structures across the board, is, and this is probably the most important one for me, is just understand the investment strategy. So if you have got the right advice and it is US domiciled, so you're investing in US investments, whether it be ETFs or mutual funds or direct stocks, etc., and it's in a vehicle that you want it to be in, so just a brokerage account, understand then how that money is being invested and the journey that money is going on. So make sure your risk profiling around that money is the right one for you. Again, I see so many people who, as a knee-jerk reaction, would be quite a cautious investor because it may be their first time investing, for example, but they're investing that money, that specific money that they're taking advice on for their retirement or for a future date, which is, you know, well in excess of 10, 15 years. But taking a cautious approach to that money may not always be the right thing to do. And similarly, you know, people who are very keen on investments, love investing, may take kind of a very high risk attitude to a very short duration. And especially in markets like this year is not an anomaly. If people are looking at the markets and worrying, guys, be aware, it's not an anomaly. It might be an anomaly in your investing lifetime, but trust me, this has happened, you know, 14 times since the 70s, you know, 20 times plus since the last World War we had. We see huge market sell-offs. We know that these things do happen, but just understand how your money is invested, the type of risk associated with the portfolio that you've chosen, and then what you can expect through that journey. And then the most important thing is coming towards that liquidation event and having that, again, that same right attitude of risk associated with the portfolio. So they're kind of the three things. They're not, you know, I can't ever say, you know, you should be solely invested in this or solely invested in that. You know, that's not what we do. We kind of just try and put that plan around that investment, and that's why I said that for us the planning part is the most important part. Investment management comes second, because if you can answer these questions as that client goes through the journey, you end up kind of, it tailor makes itself by the time you answer all the questions. But they're really the three things for me. You know, make sure it's US specific, make sure you know the wrapper or the structure that you're investing through, and then just be aware of the risk profile that you're allocating to that portfolio.
Thank you for that. Again, very comprehensive. I just wanted to talk a bit on the second point you raised about being cautious with products and platforms that may not be US domiciled. And as you mentioned, PFIX, right, the passive foreign investment companies, they are a very specific and credible risk. I mean, just this morning, speaking to a client in Singapore who is about to make an important decision. He's getting married and stuff like that. So he's just going through his affairs and he realizes that he has PFIX because he invested in products that were pitched at him. And for those who are not aware, I just want to kind of speak to what these acronyms mean. So KYC, those are know your customer stuff that the banks take you through. That's why it takes such a long time. AML, anti-money laundering, and PFIX, as we said, passive foreign investment companies. As to the origin of PFIX, they date back to the 1980s under President Reagan. So during that term, we saw the creation of, well, Section 1297, which speaks to, as Tom said, those collective investment vehicles, where at least 75% of that structure's gross income is passive, or 50% of the assets are investment held to create passive income. So basically, you're thinking in terms of a non-US mutual fund. So sometimes they're called unit trust. And then, as you mentioned, Tom mentioned wrappers. So sometimes something may appear to be a pension, a non-US pension, or some non-US retirement product, or some non-US insurance product. And when, as US tax professionals, we take a look inside, like we did with our client this morning, and then oops, you have a PFIC. So again, it's really good. I mean, just err on the side of caution and just stick to, as much as possible, if you just want to be super conservative, with US domicile products. But if not, if you want to look outside, then just definitely get advice before you jump in, because the reason why PFICs were created was because the US domestic financial institutions began complaining to Congress that, hey, Americans were getting an advantage by investing outside of the US. They're getting a tax advantage. Basically, they don't pay tax until there's a distribution way at the end. And that put these foreign products at an advantage compared to US domestic products, which is unfair. So the IRS, so when we talk about PFICs are, a bit aggressive, and they are aggressive by design. So it's a section of the tax code that penalizes you as a US exposed person in investing in that foreign collective investment vehicle, if it does trigger PFIC status. So yeah, to your point, definitely keep an eye on them, get advice, and maybe it's best to stay away depending on your situation. Now, you mentioned some of the various products and stuff like that. I have to ask, I know it's a bit of a controversial thing right now, but crypto. Where do you see crypto? Is it over? Is it like, forget it, run for the hills, avoid it? Or are you saying, well, in part of a well-diversified portfolio, maybe it has a place? What are your thoughts on that?
I'll be honest, I get asked about crypto all the time, right? It's a hot topic. It's only last week FTX has blown up and owes more than $3 billion to people. It can be a sad story, and I think a lot of retail investors have had their fingers burnt over the last decade since crypto has been around. And don't get me wrong, there's some people who've made a lot of money from it. Again, let me be very, very clear and very honest. From our point of view and from my point of view, it's just not something we advise on at the moment. And it doesn't appear in our portfolios and the way that we manage money. Clients, to give an example of how somebody may gain exposure to crypto through our way of investing. We obviously, we build very broad-based investments. We manage, stock portfolios, ETF portfolios, mutual fund portfolios, whatever it may be. But don't forget, crypto is starting to come mainstream to a degree now, and there are companies that are listed on stock exchanges, like Coinbase, for example, right? It appears on a stock exchange. So if you're investing in the S&P 500 or NASDAQ or, whatever indice it may be around the world, you may be starting to pick up exposure to crypto companies, not tokens or coins per se, but crypto companies now just through the traditional way of investing, right? Which is something that we can see in our portfolios, but we're not advising, and we don't think it's a market yet that is mature enough or regulated enough to advise clients to buy Bitcoin, to buy Ether, to buy any of these other things that are on the market. It's just not something that we're at with, and I think it's probably going to be some time since we are.
Okay, completely understood. For those who just joined us, we did receive some of your questions in advance, and thanks for that. If you have questions, please just type them in the box below if you're in Zoom, or in the chat box below on any of the other platforms, and we get to them in the order in which to receive. So it's not too late. You can ask questions below. So we've already discussed crypto. What about precious metals? I have some clients that are really bullish when it comes to the precious metals. What are your thoughts?
Potentially, rightfully so as well. I think from our point of view, precious metals is something that we do see as a good store of wealth at times. And it can and will feature in some of our portfolios at times. We have got exposure to something like gold, for example, right? Or even the broader base of precious metals, including silver and whatever else may go through. I think it's been an interesting year for precious metals, especially gold. Gold is always one of those things that many people would hoard or buy for fighting off inflation and keeping inflation at arm's length and allowing it to increase in value over the years. But like everything, I think everything has a time and a place, and it comes down to what the client is trying to achieve over the time horizon for that goal.
Okay, gotcha. Absolutely. So the next question, you're in the United Arab Emirates, you're in Dubai. Dubai kind of came into its own. I tell people, like, during the recent pandemic, at one point in time, it was like the only international city that was open. Everyone else, airports were closed, more or less, aside from Dubai. And of course, with the recent unfortunate conflict in Northern Europe, it has become even more of a haven for entrepreneurs, for investors. What brought you to make that decision to relocate to Dubai, and would you recommend it to others? And if so, what type of person you think would benefit from moving to Dubai? Just curious.
I like that. Yeah. I like that. I was always fascinated. I'm British, obviously, and to kind of just go back on a little bit about who and why I am. I'm British. I have no US connection, but I have been working with the US expat market now for the kind of last 5 out of the 7 years that I've been here. I came here. I'm originally from the country for all intents and purposes in the UK. I come from the very green hills of the Midlands in the UK, and I was kind of attracted to the UAE. Came in 2015, and it was the glitz and the glamour, if you like, in terms of the kind of had the 7-star Burj Al Arab hotel, the Burj Khalifa. It was somewhere that was probably very, very different to where I was from originally, as an extreme version of going somewhere. I've always been somebody that has traveled a lot, and I believe that you can learn a lot from traveling, and a lot of my education has been done from travel, and it was somewhere that was just completely different. From a point of view of looking at Dubai over the last 7 years, it has just come into its own, through technology and through convenience, like things like Deliveroo and just silly things like that. It's a very convenient place to be, the UAE, and it's built itself on lending an arm to convenience and attracting people on convenience. It's changed drastically, and it does want people to be here. It's always tried to bring people here, but I think one of the things that I first noticed when I came here was how transient it was, and how the duration of time people were here was actually quite limited. A couple of years, 2 to 3 years. Everyone came out with that mentality. I'll come for 2 to 3 years. Contracts were being issued for 2 to 3 years. I'll go make some money and then I'll go back home. I think it was probably one of the reasons why many governments made sure they had a good way of enforcing substantial presence tests and that kind of stuff, coming here, making good money for 6 months in the oil rigs and going home. But I think, over the last 7 years, it's changed dramatically. And I think that can really be seen through some of the initiatives that they've now launched around visas, gold visas, for example, being able to stay here for 10 years, not necessarily needing a job, investors visas, buying property here, again, just allowing you to extend that period and actually start to settle in. And I think really the most recent thing, that kind of stuff came to fruition through COVID and that lockdown period, and people, them wanting to attract them. They did lose people through COVID, no two ways about it. We lost a good proportion of the expat population here, but they launched those initiatives to try and drive people back here as quick as possible. And I have to say, through that pandemic, they managed it very well. We're quite fortunate here where, you know, if the government says something, people do it and people adhere to it. And it's been a very pleasant place to be over the last couple of years. And people have been able to get on as a result of it, you know, actually go to work, actually get back to some sort of normal living. I think the UAE moving forward is just a huge opportunity. You know, we obviously have our neighbors over in Saudi Arabia who are building things like the Neom project and trying to continue to think they're probably where the UAE was, you know, 10, 15 years ago in terms of that initial attraction. But I think just from a big opportunity place now is, you know, you've got major corporations moving here. You've got a fantastic work-life balance. You know, we have Sun 365 with a couple of rainy days to break it up. You know, we've got the beach, we've got the mountains, we've got all sorts of stuff going on, and an economy that is growing, and one of very few this year that is growing, and next year that's predicted to grow. So just fantastic job prospects. I think if you are looking to make a move, put the UAE on the list and come check it out, say hello, and if you need me to show you around, let me know, and I'm happy to be a tour guide today.
Fantastic. Yeah, I 100% agree with you because, you know, having gone through it ourselves, you know, setting up a free zone company, finding office space, getting the Emirates IDs, the process has been so streamlined and made so easy. And especially it stands in marked contrast to other financial centers like Singapore, Hong Kong, New York, London, Switzerland, Zurich. You know, it's those, I mean, they're attractive jurisdictions, but they just make it really hard to get in and to set stuff up. Whereas, you know, the UAE is complete opposite. So 100% agree with you. Now, yeah, I think we've answered, wait, hold on. Someone just, okay, we have a question here. What type of ILUL, index linked universal life, of the best suited for a US expat living in the UAE who intends to go back to the US after 10 to 15 years? Is there restriction or disadvantage on offshore regular savings plans? Tom?
Okay. Yeah, big one. So index linked universal life plans, these are insurance-based products. Very, very common in the US as part of potentially financial planning and how you use them. What I would say is one thing, it's actually quite difficult to purchase an onshore, onshore US domiciled insurance product. A lot of the time, the insurance company will require you to be in the US at the time of signing that documentation. And even doing it by DocuSign these days, they'll track the IP and all this stuff. So there is a big part of the T's and C's that requires you to be in the US to sign that documentation. So it's potentially not always easy for a US expat to buy those types of products, you know, those typical index linked universal life products, or, you know, they typically have a cash value to them. They help you grow your money. They offer protection from the downside. They can sometimes be a little bit missold and represented as investments rather than protection. So you just have to make sure that you're understanding what you're trying to achieve through that structure. Because it obviously, you know, with every positive, there's always potentially a negative with it. So you just need to understand what that is. And again, trying to assess what the right one is for you is going through that financial planning process and understanding, you know, what is it that you're trying to do with this money, right? If you're intending to go back to the US after 10 to 15 years, okay, great. That's a life event, but is that a liquidation event? Just because you're going back in 10 to 15 years, do you need all that money at that point in time? If you're either regularly contributing to that RUL or you put a lump sum into it, you know, do you need all that money straight back out? And then, you know, when we take money out of those types of products, it's kind of first in, last out mentality. What's the tax implications of it? Again, is it the right structure to use as something you're trying to grow your money, or are you trying to protect something, right? So it's trying to understand what you're trying to do with that product. And that's why, going back to your earlier question, is, you know, what are those 3 points? One of them is understanding the structure for me, and it's so important. And I think just be careful, because people can dress stuff up for something that it's not supposed to be. The second part of that question, is there a restriction or a disadvantage on offshore regular savings plans? Goes back to what we said earlier, and if this person missed it, no worries. Yes, disadvantage, stay away, is probably the big answer to that one, because that's going to fall into that PFIT category, where we've got a passive foreign investment company. You're going to see big punitive taxes coming at you, and a large accountant's bill from their end to do all the reporting is probably something that you're not going to want to hold on to. So if you've got one already, come and see somebody, whether it be me or any of my team, or somebody that has a US specific proposition, to understand what that is and how you can use it, potentially get out of it, or stay away from it in the first place. Would be, again, this isn't advice, specific advice is that to cater to those individuals, but just have a look at it first.
Absolutely, absolutely. So the rules around those, as you pointed out, are pretty strict, because I think I do have that product, and I had to execute that contract on US soil. So I was in the US to sign up and go through the little interview and answer the questions and stuff like that. So yeah, if it is that somebody's offering that outside of the US, outside of a US platform or US company, it is something, you might want to ask a few more questions to make sure that you're not heading in a direction that'll be painful from a tax point of view, at least, far less from an actual insurance compliance point of view. Later on, there may be some pain in that. So yeah, I hope that helps. Now that leads to, I guess, looking for, yes, we see Huria. Thank you for Huria's pointing out that her company helps people set up and incorporate in Dubai. Yep, thanks for sharing that. Tom, if somebody wanted to reach you or a member of your team, what's the best way to do that?
Yeah, you can go to skyboundwealth.com, and literally just, we have a contact us box on there, easy enough. You can write to me through that service there. That's probably the easiest way to get hold of me. Those emails go directly to my administration team, and we monitor those pretty much all day, every day. So yeah, skyboundwealth.com. Please feel free to reach out.
Okay, that sounds pretty simple, easy to find. Skyboundwealth.com. Tom, thank you for sharing some of your time today, sharing your expertise. Thank you very much. Appreciate it.
My pleasure, Dan. Good to see you.
Okay, have a good one. Bye-bye.